We think now is a great time for investors to be allocating to small caps because you have a confluence of things going on that we think will propel the asset class going forward.
Over the last 40 years, there's been multiple long cycles of small versus large caps. And for the last 14 years, we've seen large caps significantly outperform small caps. We think now's the time to start thinking about smaller companies.
If you look back over past cycles, there's what we call changes in regime and changes in leadership between small cap and large cap. And we think at the current time, we're getting closer to that regime change or leadership shift that will usher in a pretty extended period of small cap outperformance.
There are three potential tailwinds that'll drive small cap outperformance. One, reindustrialization, or the onshoring and nearshoring of business to the United States. Number two, higher inflation for longer, which will allow pricing power to expand and margins to expand. And three, we have very attractive relative valuations in small caps today that are similar to what we saw in the 2000 timeframe.
Large caps have really benefited over the past decade from this trend of globalization. We have a trend of deglobalization and reshoring. We've seen things like the Inflation Reduction Act and the CHIPS Act, and a lot of these laws and regulations that have been passed, we think will benefit smaller companies who service these industrial markets.
We've finally seen inflation be stickier and more impact to businesses. And while in the short term, that's been a negative for small caps, we think that since they haven't seen this type of pricing power in 40 years, that we'll see a lagged effect of that pricing, which will actually drive margins to expand.
We think small cap valuations are very compelling relative to large cap valuations. Since the great financial crisis, small caps have been derating relative to large caps and now trade at a fairly significant discount, which we think makes a fairly attractive entry point for the asset class.
We believe that there are three key advantages that we have at Rockefeller for U.S. small cap investing. One, we have a quality approach. Two, we have a seasoned team of portfolio managers that have been doing this for decades. And then three, we have a concentrated portfolio.
Our quality approach means that we're looking for sustainable businesses with a significant moat around that business, with a management team who has a well-defined and well-executed strategy, and really with the potential to drive returns on invested capital higher over the long term. We do not invest in companies until we've met with the management team. We'll stop.
These small cap companies go through cycles, and sometimes things aren't going their way. If we get to understand how the management team thinks, these things are imperative in those management meetings. It's important to have a seasoned investment team for small cap investing. I've been doing this for over 25 years and investing in small caps for the last 15 to 20, and we've seen a lot of different cycles.
The benefit of a concentrated approach is that it allows us to embrace stock-specific risk when we have good ideas. We do a significant amounts of due diligence at the individual company level. And the last thing we want to do is dilute our good ideas. The key differentiators for Rockefeller Asset Management is our extensive track record in the U.S. small cap asset class, the Rockefeller access and network that we have, and the breadth of the Rockefeller Research Network.
Rockefeller Asset Management has been investing in small cap companies since 1989. We have a long history of working closely with our clients as a boutique asset manager, which I think really provides us a great advantage in investing with smaller companies. Many times we can find experts around research, either at university or in the field. We have all these opportunities to talk to these amazing clients and network that we have today to be able to help us differentiate and or find out about new technologies and things that could be competitive threats to our businesses.
Jason and I have access to not only a broad and deep equity analyst team, but also access to other equity portfolio managers, fixed income portfolio managers, and alternative portfolio managers. And at the end of the day, this helps us lend better insights into smaller cap companies.
All this collective expertise is a big reason I'm here. We have so many experts with lots of experience, which should benefit clients in the long run.